I'm Kristen Macurdy, founder of Guided Surrogacy Solutions and former intended parent. And with me today, I have Sarah Paige from Art Risk. So Sarah has been a professional in the art-assisted reproductive technology insurance field since 2010. As Chief Operating Officer of Art Risk Financial and Insurance and Solutions Incorporated and a licensed insurance agent, she remains current on all insurance issues pertinent to the art field and works to find the best solutions for art risk solution clients embarking on surrogacy journeys. With her extensive breadth of knowledge and expertise in the art community, Sarah has been requested as a guest speaker for the American Bar Association section of Family Law, Seeds Brown Bag series, and the podcast Put a Baby in Me. One of Ms. Paige's professional accomplishments was serving as an expert witness for Nevada State Assembly Bill AB 472 alongside its author, Kimberly Surratt, in the 2019 legislature with Nevada accepting and placing into law inclusive insurance language for surrogacy coverage. She is an insurance liaison for Above the Law blog, has written and co-written several articles for the Quarterly Seeds newsletter. She currently serves as an officer for Seeds and as a chair for membership. Ms. Paige's focus is always to offer clients the knowledge to help them better understand their liability exposures and the best available financial risk management solutions, with her emphasis in enabling the art community to make the soundest insurance choices for a surrogacy journey. That's impressive.
That's a mouthful.
It is a lot. We're so happy that you're here with us today to talk more about insurance.
Thank you. I'm excited.
I'm so happy that you're here. So I have in front of me this amazing surrogacy insurance wheel.
Yes.
Talking about all aspects of insurance and the correct time to really start researching insurance regarding surrogacy and also when they should be put in place.
Yeah.
So I thought maybe we could start about talking about surrogacy and whether surrogates' health insurance is surrogacy friendly.
Yeah.
And really, what does that process look like?
Yeah. Yes. Okay. So first and foremost, I love talking about insurance, which is so funny because most people are like, the insurance isn't fun. And I'm like, I'm going to make it fun. We're going to figure out how to make this really fun for everybody. So in regards to surrogacy insurance and when people are just kind of starting their journey and figuring out if they're going to be able to have that kind of coverage, I always tell people the first thing you want to do is look at your own insurance, because that is always going to typically be the least expensive way to get coverage. And so part of our job also is looking at what financially, of course, the risk is, but how do we also save money for intended parents? How do we not over-insure, and how do we make sure we can use perhaps what's already there for surrogacy? So in an effort to try and do that, our kind of number one thing that we want to do is review the surrogate's insurance. We want to see, hey, the current insurance that you have, either through a spouse's employer or through your employer, or maybe you just got it on the open market, does it actually cover surrogacy? So one of our services that we offer is called a policy validation, and we're going to go through that process. We're going to call the insurance company. We're going to look at the policy booklet. We're going to see if there's anything kind of obscurely written. Sometimes there's like a document that's hidden in, I don't know where. Sometimes like in the back of an insurance company's notebook, I feel like sometimes it's not like out there for anybody. They won't send it to you, but it's a secret document, but they'll read it to you. Insurance companies are very interesting. So we go through all of that to see, hey, is this viable? And it's really important for us to check that out, and then if it is viable for a gestational carrier, for a surrogate to use it. It's easier if they have their own insurance. It's less expensive for the intended parents if they have their own insurance. So I would say probably of all of them that we get in our office, approximately 82%, which is kind of a specific number, but I have done the research on this.
I knew you would know.
Does cover surrogacy. Wow. Now, I will tell you that we don't get every single booklet in our door. And also, if we look through the language and we say, yeah, no, there's a clear exclusion, we also choose not to review it, because that's part of the other things. I don't want to waste someone's money. If there's a clear exclusion in that policy, we're going to send it back and say, hey, this actually does not cover, here's the clear exclusion, or we've done this review before, they're vehemently against covering surrogacy. So that's part of why that number seems, I think, in the scope of all insurances, seems a little inflated because, one, if we don't need it, we're not going to do it. And two, a lot of times people will take a look at it on their own, which I don't necessarily recommend, but they won't do that, and see if it covers or not. And then also we don't, like TRICARE, I'm not going to review a TRICARE policy because it doesn't cover. Right. So again, I'm not going to spend someone's money in that capacity. Also, typically Medicaid policies, most people don't allow surrogates to be on Medicaid policies and use them for surrogacy. So we won't review those either, except in the state of New York where it is legal to do that.
So you mentioned this policy booklet.
Yes.
Which is one of the most difficult documents to obtain, maybe aside from medical records in the surrogacy process. So can you explain a little bit more about the different types of language that insurance companies use to call this policy booklet, or how someone can even find the policy booklet?
Okay. So the policy booklet is the large contract that you have as a consumer with your insurance company. And it can be called an evidence of coverage. It can be called a certificate of coverage. It can be called a policy booklet. It can be called a benefit summary, which I think is interesting because it's typically over 60 pages, usually inching towards 100. So I find the word summary to be a little incorrect, but that's okay. So I don't usually like that. Those are usually the terms that we use, that the insurance company will use as well. And you're right, it's almost like they're these figment of an imagination, like they just don't exist sometimes, but they do exist. And so we have to keep telling people press and press and press. Legally, everybody has to be supplied with this contract. You cannot sign up for insurance and not one person hand you your actual contract, because inside your contract, you typically have a period of time where you can say, hey, this contract actually isn't for me because it doesn't cover what I needed to cover. It's called a look period. But you have to have that contract in order to understand it and say, is this for me or not? The interesting thing is that in the the commercial world is split up into self-funded and fully insured plans. And the self-funded policies, which are the ones that we typically have the hardest time getting, and that's because they have up to 90 days after they have signed somebody up for insurance to hand them a contract. So if the insurance starts January 1st, then they really don't need to have it ready until the end of March.
It's mind-boggling.
Right? Which I'm like, okay, but that gives nobody an opportunity to get anything else in the meantime, right? And kind of pigeonholes them into having this policy that then we have to wait for 3 months to potentially see if it's going to be surrogate friendly or not, which is crazy to me. On self-funded plans, they make sure they have 30 days to change something, but they don't have to tell you until after the 30 days after they've made the change, which again, right. I know they run under completely separate rules. And kind of the best way, a lot of people will say, like, how do you know if it's self-funded? How do you know if it's fully insured, right? Those are questions we get a lot. And I think part of it is the self-funded, it means that the company owns the policy and that they actually pay all the claims and that they're hiring the insurance company to go ahead and basically administer. They're like an administrative arm of them, but the actual company owns the policy. Your employer would own the policy. And a fully insured plan means that the insurance company owns it, the insurance company is paying the claims, and the employer essentially is a conduit of selling the insurance, but that's about it. So they play by different rules.
So if you have a self-funded plan, there's a chance that at any time they could potentially change the coverage. So when a surrogate insurance review comes back and says, this is a self-funded plan, there are no stated exclusions about surrogacy. However, because it is self-funded, and I'm probably not using the correct insurance terminology, there is a risk. So what do intended parents do in those types of situations?
Yeah, so there are insurance policies that you can place as a backup to that self-funded plan. And essentially, I always tell everyone they're going to hang out in the back. They're going to just relax for a little bit. And then if you need them, you're going to cry mercy, cry uncle, whatever your terminology is, and say, hey, my insurance company is not working. Something happened to it, or the language changed, or I switched jobs, or so many things that can happen. And I need this insurance company to now pay on my behalf because our original plan isn't going to work. And so we have those policies available in case, and I do recommend getting them. They're not crazy expensive, but like you said, with the 30 days where they can change something. Also, if somebody changes jobs and that insurance potentially is no longer available, that's a problem. So it's kind of like I call it like kind of a little bit of a catch-all insurance, is that if something does happen, this is going to be your way of knowing that no matter what goes on with the current insurance that the surrogate has, that you are protected in the long run. And that's really what our goal is, always, time and time again. I feel like our keywords are going to be risk and protection.
Right. And
over
how
and
much
over.
risk are you willing to take?
Yeah, absolutely.
Right. So that's interesting that you said about 82% are considered surrogacy friendly.
Yeah.
Okay.
From what we review.
Okay.
Yes. Yeah.
And a large majority of those are self-funded?
Yeah, definitely the large majority. I was thinking about percentage-wise what it possibly could be, because I don't have that number off the top of my head. And when we're looking at the policies, I would say that we'd be in like the high 60s, low 70s in terms of percentage-wise of what we would consider to be self-funded plans that we review.
All right. So if a surrogate's insurance is reviewed and it's deemed that there is some type of exclusion,
Yeah.
what are the options? I mean, what does that look like from a timing perspective, but also from a financial perspective? Because when our intended parents come to us, they have a budget in mind.
Right.
And we want to make sure we're being very conscious about protecting that budget. And how does a surrogate who does not have surrogacy-friendly insurance, how does that work for their budget? So can you explain a little bit about the timing as well as some of the financial implications?
Yeah, so this is always an interesting question, because when we're dealing with finding additional insurances, we're really talking through almost kind of like, do we want this piecemeal? Do you want this easy? Do you want to start now? So part of it, on top of the risk and the cost of it, it also goes back to the intended parents and their expectations and the timing of their journey. I can make anything work at any point in time during the year. There's insurance. It really is going to fall back to kind of what you said, cost, and then overall risk within that insurance. But we have options for them at all times. I always tell everybody, I'm like, no, it's there. It's just, it may not work for your journey and what you want. So during kind of the big point in time where we get insurance is during the open enrollment period for the Affordable Care Act, which Obamacare, ACA, anything you want to call it, commercial insurance, it's all the same thing. So when we're looking at that starts November 1st, except for Idaho. Idaho starts October 15th. Be clear about that. And then it's going to run through January, usually, and there's different dates for each state. Idaho's actually done December 15th, so they start early and they end earlier than every other state. Every other state pretty much was between January 15th and January 31st. Some did extend a little further. That's a big period of time to get the Affordable Care Act insurance, which is going to be one of the least costly insurances to get. And it actually provides the most coverage, which is interesting because you would think some of the more expensive insurances would provide more coverage, but they don't. So ACA, Affordable Care Act, Obamacare, they're all really great to make sure that there is viable insurance coverage. And that's usually anywhere on the low end, you're looking probably around $12,000. On the high end, you're going to be around $18,000. That would take care of premiums for about 15 months. Because we always look at it that most journeys are not typically fully within a 12-month period. So you're going to have a little bit of expansion prior to transfer. You're going to have a little bit, of course, after delivery that you have to maintain the insurance according to your contract. And so we usually find out about 15 months plus the out-of-pocket maximum. I get a lot of questions like, what about deductibles and co-insurance? And, what about co-pays? And I kind of tell all intended parents, everything's underneath that out-of-pocket maximum. So that's your concern, your premiums and your out-of-pocket maximums. And that's where that 12 to 18,000 range is going to be. I sometimes get the comment of, isn't that the cost of a pregnancy? And why do I need insurance? But the answer is yes. It is, and you don't want to be left without insurance because that's the minimum cost of what it possibly could be.
With no complications.
With no complications, singleton, vaginal, just yeah, you're perhaps a unicorn of a
of a pregnancy. Yes.
And then outside of that, we run into specialty products through the Lloyd's market, and so that's Lloyd's of London, which has been around. I think this since the 1600s. I mean,
1600s.
I swear to you, it's so because it's an insurance market, and so they've been around forever. And then what they have are these little syndicates out. So there's I always tell everybody, it's a big umbrella in the sky, and then there's all these little syndicates, kind of like the pokes sticking down of the different insurance companies that come from the Lloyd's market. And so there are 2 insurance companies that sell Lloyd's of London products, and those 2 companies have maternity specific insurance. And the maternity specific insurance usually is around $30,000 for a singleton and around $45,000 for twins. And I get a lot of questions about wow and why, because that's a lot of money. And what I tell everyone is that it's 100% usage. Everybody who's going on that policy is going on it for maternity purposes. There's nobody on that policy that is not going to utilize that insurance. So it's a utilization percentage. And if you have a high utilization, which you have 100% utilization on that policy, the insurance company, it's a business, they have to make money. And so the policies are priced to pay everybody, of course, pay the insurance company, pay the agent, pay the taxes on it, pay all of your fees that you have to pay towards either the London market or the state market, depending on where you are. And then you have to pay for a pregnancy where that averages in the US around $22,000. So when you think about everything that goes into it, you're looking at maybe an $8,000, let's call it administrative expenses for everybody, plus $22,000 for an average pregnancy, and then it will cover around $500,000. So it's not, when you kind of sit down and explain the math behind it, it's not a terrible policy. It's just that it's higher financially, right? And no one's out there to gouge it. And I actually love the Lloyd's market. I love our London people. They're all this is their feel good policy, they say. They don't actually want to price gouge on this because they want to keep it open for everybody. So the pricing has been consistent over 12 years. I don't know what you can say in terms of pricing that's been consistent over 12 years. Nothing. So the fact that it's been consistent, it hasn't even gone up in percentages compared to medical expenses.
Right. That's my next. So even though the cost of a pregnancy has increased, their plan has not changed.
Their plan has not changed. And it's 6% increase year over year on average for medical expenses. And their cost is not altered. Now, they have changed, of course, who they work with. They've changed how they manage claims. So they've done a lot administratively to make sure that they can keep that cost as low as they possibly can, which I appreciate because, like I said, this is their feel good. This is something that makes them as a company feel like I'm doing something good in the world. I have a product that I am able to sell, and not necessarily. I hate the word sell. I will tell you that I don't like the word sell, but that's how they view it, right? There's a product that they have that is helping create families.
It's an option.
Right, and they don't want anyone to not be able to potentially access it. So they've kept, again, lots of work on the background to keep those costs as low as possible so we can keep it on the market and not price it out of the market. That's always something that we're really concerned about, is getting it too high. outside of the Lloyd's market, then we go into short term. And short term is not available in every state. It depends on where you live. It also can only be available for 3 months, so you have to be really careful about when you get it. And that only covers complications of pregnancy. So it's not going to cover your standard normal maternity. It's something that we do in conjunction with an ACA plan.
From a timing perspective?
Which means that we may, earliest that we would ever place a short term would be June. And that means that the medication has to start after the policy is placed. You cannot do medication beforehand. So we're really not looking for transfers until July and or later, depending, of course, on how long the policy can be in place. If it's a 6-month policy, not a big deal. If it's a 3-month policy, then we have to wait even longer to be able to, and the journey has to wait longer. Yeah.
So that would prevent potentially from having to purchase that Lloyd's plan.
Yes.
In the hopes that I purchase this short-term plan, and then when open enrollment is available, I purchase the ACA plan that would kick in January 1st or whatever the effective date would be.
Yes.
And it's complications only. So if my surrogate was released to the OB and she had those appointments or had an ultrasound, that would be cash pay.
It would be cash pay. Yes.
So there's multiple options depending upon the timing of transfer as well as the financial risk.
Right.
Right.
And when we're talking to intended parents, that's really what we're asking them is what's your comfort level? I can't tell you. I can tell you all the options that are available. I can outline all pros and cons for everything. But at the end of the day, what are you comfortable with? And financially, what are you comfortable with, right? Like you said, financials and risk. And that's what we're comparing at all times.
So what happens in a situation where a surrogate's insurance comes back? It says it's surrogacy friendly. However, there is a lien on that surrogacy insurance or that health insurance regarding surrogacy. How do those types of situations work?
Ugh. We hate liens. We really hate them. We really hate liens. So,
can I ask you a question before we even go into that?
Oh my gosh. Yes, let's ask.
Why even say that it's surrogacy friendly? Because it's like, if there's going to be a lien on it, why even say that it's going to cover when a woman is acting as a surrogate?
Because it does. There's no exclusion. So some people,
but some people argue, wouldn't it just be better if it did have an exclusion?
I think in some circumstances, I think we always look at it as, if it's not, I guess we look at terms of friendliness because I think that's the question here. What does friendly actually mean? I think where we're looking at the friendly aspect of it, we're saying, hey, there's no exclusion. You will have coverage.
We'll pay.
Loosely. I'm going to use that term so loosely. You will have coverage. They will pay all of your claims. Okay. And then when the surrogacy is all done, then they're going to go through all of your medical claims that pertain to the surrogacy, and they're then going to seek reimbursement. So the lien, it's not like a regular lien like you would think in terms of like a house or a car. It's actually a right to reimbursement is what it technically is called. I think they use the term lien very loosely in terms of what it actually is. It's a right to reimbursement. They're saying, we paid for this. However, you as the gestational carrier were paid for this journey. So therefore, we're going to seek reimbursement. They are looking at it along the lines of kind of like a workers' comp claim or a car accident where there's a third party that's liable for all these medical expenses. You were paid as compensation for going through the journey. And so then the insurance company is saying, well, because there's a third party and you were paid for this, then again, it's not really our responsibility to pay it because there's money floating around there that we should not really be responsible for. So then they seek that reimbursement from the gestational carrier because, of course, she's the one who was compensated. Really, though, it goes back to the intended parent, because then inside the contract, it's going to say, hey, the gestational carrier surrogate is not responsible for any medical expenses. So then it really becomes the burden of the intended parent. Yeah.
And is there a limit?
Some yes, some no. So depends on where you are. In Colorado, the limit is 50%. In California, it could be as low as 33.3%. However, it could be up to full compensation. Oregon is up to full compensation. And there are a couple policies that one of them is in Ohio, that it's all medical expenses and it's not capped at compensation. So anything goes. Yeah, which is terrifying as an intended parent. And those are the policies that we would not say are surrogate friendly, because there's no cap. The sky is the limit. If she had $100,000 worth of bills, somebody would be responsible for paying, right? Versus up to compensation. Of course, with compensation rates going up and more high comp surrogacies, that also presents an issue, because if we're talking about really, I kind of look at above 50 to 60,000, that's significant in excess expenses for an intended parent. And that's when then we're looking at the alternatives. We may go a Lloyd's route.
With Lloyd's, right?
Yeah.
And so the Lloyd's would then be half the cost.
Yeah, it would.
And that's where, in that sense, the Lloyd's plan would make sense.
Right.
Okay.
Right. So we again, these options and the liens, and the liens are, again, the right to reimbursement lien. They're going to call them liens, but they really are the right to reimbursement. I hate when they call them liens. I'm like, it's really not a lien. But ultimately, those policies, and that's why the vetting of insurance is so important, because you may look at an exclusion and say, oh, there's no exclusions in this book. Okay, but you have to look at coordination of benefits. You have to look at the right to reimbursement section and make sure that there's nothing else additional in there that's going to cause somebody to actually end up paying more than the anticipated cost. I can tell you some of the worst conversations to ever have with an intended parent is when the costs were not accurately outlined to them. And now they're in the middle of a journey and they have twins, or they have even a singleton, and we're letting them know, oh, and by the way, there's this excess amount that you're now responsible for. And they had no idea.
And is that because the insurance wasn't reviewed?
Sometimes it's not even that. It's that...
or just it wasn't...
You know what it sometimes is that not that it wasn't, it can be that it wasn't reviewed. It can be that it was reviewed and it wasn't disclosed. It can be that it was disclosed but not explained. That's usually the number one thing, is that the insurance review is passed over to the intended parent. The intended parent takes a look at it, but they don't typically, just like a lot of us, if we're not doing this day to day, I don't know everything. I mean, you could hand me any kind of a report from a medical facility and I would look at it and be like, that's cute. And I'd pick out like certain things. I'm like, I understand that and I understand that, and probably retain 10% of that information. And then the doctor would be like, we disclosed this to you. I'm like, no, you did not. But they did.
They did.
It's just that it wasn't explained. And I think that's the biggest difference of like, it's why we love talking on our side. I love talking to intended parents, because I want to explain everything to you. So
would you suggest then, once the insurance been reviewed and it's been presented to the intended parents with match, hey, the surrogate has, surrogacy friendly insurance, let's set up time with our art risk broker so you can review this in more detail, but also understand some of the other insurance options you have that you'll need during the surrogacy journey?
Yes, 100%. And we love it when they're matched. Like matched and pretty much right around like kind of starting legal, because some of our insurances that we have, the life insurance, the loss of reproductive organs, disability insurance, that all goes back to contractual obligation. And so we have to have the attorney and really the contract almost fully done at that point to understand, okay, here's what's going to be necessary for your journey. And that's why I always say there are no two journeys alike, because you're not the same as me, I'm not the same as you. So every journey is going to be different in how we handle it. The contract is a guideline for us of what legally may need to be in place. And that's why we look at it.
So gestational carriers' health insurance should be reviewed prior to match.
Yes.
After match, really once, legal contracts are complete, that's when intended parents should be talking about and learning more about the different types of insurance that need to be purchased, as you mentioned, the accidental death insurance, organ loss, and permanent disability.
Yeah.
So can we talk a little bit more about those?
Always.
All right. So accidental death insurance, is that the correct term?
Yes. So there's two different types. You can do like a term life policy, and then you can do an accidental death policy. Some people call it A, D, and D, but on the accidental death and dismemberment is actually sounds morbid, but that is what it is called. And then you of course have term life, but on the Lloyd's market, it's actually just accidental death. It's not accidental death and dismemberment. And the reason being that because it's for surrogacy, we're not covering any form of dismemberment. We're just covering an accidental death. And the reason that it is underneath accidental death is because the outcome of childbirth is not death, right? It's just, that's obviously, it's life. So it's definitely not death. And so therefore anything that would lead to that would be considered an accident. It's not something you go into thinking that's what's going to happen, right? So that's why it's underneath accidental death. And then term life is your standard term life that you can get on the open market. Kind of, I could go get it off of, any kind of usually website. I could Google term life and go get some term life. The difference is that not all term life covers surrogacy, because some have had views on it of going and doing something that's not medically necessary. And so therefore you kind of like bungee jumping and things, you're taking your own life into your hands for something that's not medically necessary. I will die on a hill that says that if you're going to say that for surrogacy, then you can say that about every single pregnancy in the United States, that it's not medically necessary. Right. I mean, if we're going to, it's a whole opinion of mine, but I know that's a tangent. I just don't like when they split the hairs, because I don't feel like there can be a hair that's supposed to be split with that. A pregnancy is a pregnancy. Regardless of the situation. So sometimes when they start arguing, I'm like, then everyone is not. Every single pregnancy could not be considered medically necessary. It could be a choice of yours, which for some it is, and for obviously others, they really have to go through the struggle. So that's an option for term life, accidental death. From that point, we're looking at really the contract to say how much coverage is needed. And we're finding more and more. What are you putting in your contract typically?
So for our gestational carrier benefit packages, it's a minimum of $500,000 for the gestational carrier, and then the intended parents can opt in to be a beneficiary as well for up to $100,000. Yeah.
I really, really think that's the way to go. I see some contracts that are still around the 250 mark, 250,000, and I really just don't feel that that's enough for a gestational carrier. That's old news. I've been in the industry for 13 years, and that's what it was 13 years ago, and even before that. So I find that that's not sufficient. I think 500,000 absolutely should be the standard across the board, and then more if people would like more, if they, obviously negotiations in your contract, but that could happen. And then I love the intended parent benefit as well. I think that's important. A lot of people get concerned about that and think, oh, it's going to take away from the gestational carrier. It doesn't. It's an additional thing. The intended parents, of course, have spent a lot of money on the journey, and if something were to happen to the gestational carrier and happen to the baby, they would be able to, again, some of the money to be able to start that journey again, if that's an option for them, if there's embryos available, right? And I think that's important to allow that option to happen for intended parents, and of course not eat into anything for the gestational carrier.
Completely
and her
separate.
Family. Yeah.
So this accidental death policy, how does the underwriting work? Is that, does someone have to come to my house and draw my blood?
Yeah. No. That's the glorious thing about accidental death. I know. That's why honestly I like it better than term life. Term life is a lot more invasive. It's harder to put into place. They also take into account your overall health as well as your credit score. And I know it's a little crazy. I'm like, why? Because your credit score, I guess, leads into risk, how risky of a person you are.
Okay.
I don't know if I agree with that. It's okay. Topic for another day. So the accidental death does not. That it's just a really quick online application as long as the gestational carrier has been cleared by the RE, which they have been if they're at that point. They get the insurance. And it's a very quick and painless process, which I think is important. Term life, sometimes people are looking at it like, oh, it'll save me $100. I'm like, yeah, but the pain of everything else you have to go through, the gestational carrier, the potential of, like you said, a home visit and having blood drawn to see do they even qualify for it, plus the invasiveness of asking what the credit score is and then being judged upon that. I don't think it's worth the savings of $100. If it was thousands, sure, but it's not. It's a minimal difference.
And what is the timing around purchasing that?
Yeah. So accidental death is wonderful because it's in place within 3 days of when you apply, which I love. And preference, and it's not, everybody does not do this, but this is a preference, is that it's in place prior to med start. And so essentially it's active at the medication start date. I like it that way because I think it protects all parties. Like at this moment that we're filming this, we have a gestational carrier that's in ICU right now due to medication. And that's a real risk.
Wow.
And so I really feel that it needs to be in place as soon as she is starting anything having to do with medical. Again, medication, procedures, that insurance should be in place at that point in time. A lot of contracts will say by the time the transfer happens. I've even seen contracts that say by the point that they're pregnant.
Yes.
And I don't like that. That's way too much of medications, difference in hormone levels, procedures. It's a really hard, on my end, it's a really hard no.
I just had a set of intended parents who their first journey, they said, oh, we didn't have to have this in place until heartbeat. And I said,
Crazy.
well, this is how we're doing it.
Yeah.
And so it was in place before med start.
Yeah. The heartbeat one always, I'm like, what?
Because there are so many things prior to that.
Yes. So many.
That can happen. Okay, so optimal time frame is prior to medication start. But what if I don't know when my medication start date is? So legal contracts are completed, but the clinic is still working out their time frame and drafting their calendar.
Yep.
Can I still apply?
So you can. The application, you can always apply. You can put a date in of like to be determined. It's the only thing that they will do is that if the date changes, there's a $75 administrative fee. So the insurance company will charge that to change any dates. So typically I say wait until you get the med calendar. That's fine. Okay. And then when you have that calendar, go ahead and apply.
Okay.
Yeah.
Okay.
Very rarely do we have where the med calendar is given and then they're starting meds the next day. That's usually more of an administrative issue from other people. Do you have that happen a lot?
I've had a couple where, the clinic is just, they have them on the schedule,
right?
But they won't draft the medication calendar until they have the legal contracts,
right? And
they're just, okay, here we have it. Okay, let's go. You're going to start on Monday,
right?
And we're scrambling sometimes.
I know.
And I appreciate that they want to do get everyone in and complete that transfer because everyone wants to be pregnant yesterday. Yep. But administratively,
it's difficult.
It can be challenging.
Yeah.
So in addition to the accidental death, there are other riders. Is that the correct term that I can add on to those insurances? Yeah.
So riders that can be added on are going to be loss of reproductive organs, which I think I like. I like that insurance. I think if I was going through the process, I 100% would get that insurance.
It's a no-brainer.
Yeah.
For the cost?
For the cost of it, right. And it happens. The loss of fallopian tubes, the loss of ovaries, partial hysterectomies, that's real. I mean, I'm like, if we're protecting against death, then we 100% should be protecting against this, because this happens exponentially higher, of course, than an actual passing. So I do think everyone should have that. And then the permanent and total disability can be added to it as well.
So can you explain a little bit more about what that means?
Yeah. So the permanent and total disability is actually a amount, and it can be 100,000, 200,000, 250, 500,000. So you kind of pick the amount the intended parents do. And what it does is that if a gestational carrier is disabled longer than 6 months, then it would cover, it's like a one-time payout for her. And the way that they look at it is there's typically 5 items that consider that you have, that an insurance company considers to be part of normal living. One of them is like breathing, walking, right? There's, I wish I had known all 5 of them, but I don't, but there's 5 of them. And so if any one of those 5 is then taken away, then that is considered a permanent disability. So kind of the biggest one that we've had, and it's happened a couple times, has been cardiomyopathy. And that is actually what has lasted longer, of course, outside of the pregnancy. And that is something that they will have for the rest of their lives, which alters overall daily living. So they can't typically lift more than 10 pounds. There's just a lot of restrictions on actual movement. So like that would be a permanent disability at that point in time.
So in addition to those riders for the life insurance, anything else that really needs to be purchased at that time prior to medication start and prior to transfer?
Recipient insurance.
Okay, so let's talk about
let's talk about recipient insurance, guys. So this is overlooked 100%. I will tell you that, and I don't think it should be, but it is. And here's why I don't think it should be. I don't think it should be because 2 reasons. Number 1, it's really inexpensive in the scope of this journey, and number 2, things do happen prior to pregnancy, and that we want to protect them. So what recipient insurance does is it's basically IVF complications insurance specifically for the gestational carrier. So it's going to cover anything regarding adverse reaction to medication. As I told you, we have a GC in the ICU right now. It would be covering all those medical bills. It also covers anything that happens during the actual transfer procedure, ectopic pregnancy, perforated uterus, like things that do happen.
So would my health insurance not cover for those things?
So this is always the interesting debate, and I love and I know that's why you brought it up, Kristen.
It is.
I understand that's why. So no, technically speaking, if you have a non-covered service, which fertility medication and fertility procedures for a gestational carrier are typically non-covered services, then they do not have to cover complications from those services. So that always gets a little sticky because sometimes insurance companies do, because they're not looking at all the different things. They're saying, oh, she's in the hospital, oh, she's having issues, oh, she is clotting or not clotting, or kind of different things that can happen from the medication. Or same with the perforated uterus. It's not coming through as IVF. It's actually coming through as an ectopic pregnancy. Well, that needs to be handled. So sometimes the insurance company just doesn't have all the information to actually say, we're not going to cover. I always tell everybody, the policy is $300. Like, just get it in the instance that if something does happen, then you're covered, number 1. And number 2, given that the insurance company legally does not have to cover. So in most insurance company booklets, it'll specifically say, we do not cover complications of a non-covered service. That's actually an exclusion. So they have the option to not cover at that point in time. Now, I will tell you, a lot of them do, but if those bills got high, if you don't think an insurance company would be digging into that, seeing what went on and what happened and asking for more medical records, you would be very wrong.
And if I have purchased an ACA policy for my gestational carrier, highly recommend.
Yeah. Yeah, I think in any situation.
Any situation. So it doesn't matter if her insurance is stated that it is surrogacy friendly.
Right.
Regardless. It should be purchased.
Right. Because we're not looking at the surrogacy aspect. We're looking specifically at the fertility portion of things.
And the complications related to that.
Yeah.
And that is per cycle, correct?
Yes.
Okay. So if the first transfer is unsuccessful, then that's something that I would need to purchase a second time.
Yeah. And they do have ones that are like you can buy 4. Essentially, it's like a package deal.
4-pack.
4-pack. But honestly, we don't usually see 4 transfers happening on one gestational carrier.
No.
We're usually at 3 at max. So it's not a hot seller because I wouldn't tell someone to get it. So
okay. So IVF complications, organ loss, permanent disability, accidental death. Whew. That's a lot.
It's a lot.
It's a lot. And as an intended parent, to process all of that, plus the health insurance aspect, it's a lot.
It is.
So, as far, again, as the timing of when to really meet, right? So I should be having my surrogate's insurance reviewed prior to really, I mean, if I'm going independent.
Right. Oh, yeah.
If I'm going independent, like I did in my own surrogacy journey.
Yes.
You know, when is the best time for me to have that surrogate's insurance reviewed? Is it after her medical screening?
No.
Is it
as soon
as her medical records are being reviewed
before? Soon as you think you want to work with her.
Because that will help me also understand my financial risk.
Absolutely.
Okay.
Absolutely. And sometimes we'll have intended parent. I mean, I've had intended parents that say, I have 6 surrogates, which I'm
6
like,
surrogates?
I know. I was like, I think we need to narrow that down just a little bit. I know that there's
like 6 options.
6 options. Yeah, not 6 surrogates lined up ready to go. No. 6, I know. Babies. We're looking at 6 potential surrogates. And usually what I tell them is whittle it down. Do not do 6 insurance reviews.
Where are they finding 6 surrogates at a time?
I don't know. Those are times where I'm like, maybe we want to really like feel who feels good, right? Because this is especially for independence, this is a really important relationship for what? 2 years?
Almost 2 years.
Yeah. So I really that's usually what we tell them is like, hey, don't spend excess money right now. Let's try and really think about what you're looking for, and let's go from there and see if we can kind of marry those relationships a little bit better, and then do the insurance reviews on like 1, 2, maximum 3. Again, because I don't know, maybe I'm just crazy, but I'm like, I don't think I'm going to find 6 people that I just love, right? Real cool. I mean, that's not maybe that's
I don't know.
Maybe that's like more of a self situation than anything. But like, I like people that that I want to be in this journey with for again that 2-year mark. So on that part, that's kind of where I think, in a way, we take on a little bit of that agency role when we're talking to them prior to, and they come to us and say, okay, I have all these people. Then we look into it. Okay, which states are more surrogate friendly? Where is she going to want to deliver? Like, is this in line with you? Have you talked to her about potentially reductions, right? Like, have you gone through all of your non-negotiables with them, right? Like, prior to this. And so we find that we end up having a lot of those conversations with those intended parents that bring several gestational carriers to us. We find that they are probably some of the more lost intended parents that are trying to go this alone, right? And don't have all the resources that they need in order to do that, and don't want to make a mistake.
Right.
And that's really what it comes down to. They want to make sure that they're getting the best of the best of the best, which everybody wants that. But sometimes all those options can become stifling. And so we try and guide them. I'm like, okay, this is, also, do you have an attorney yet? Most of the time they don't even have an attorney. And I'm like, go find your attorney. Like,
so you're really guiding the independence.
Yes.
That's remarkable.
Yeah.
I mean, when we went through our journey, we had our lawyer review our surrogate's insurance plan.
Yeah.
And I know that our attorney did not make the phone call to the insurance company.
Right.
So you were doing a lot of work guiding and educating those intended parents.
Yeah.
There's another product that I really want to talk about.
Oh, okay. Okay. What is it?
That I think is extremely important, and it's claims management.
Ooh.
Because I'm learning from the agency perspective now when you have a gestational carrier whose primary insurance has an exclusion.
Yep.
And then an ACA plan is purchased.
Yep.
That unfortunately, sometimes the one that has the exclusion does pay.
Yep.
And that can cause a billing nightmare, especially when it's time to close escrow.
Yes.
So I just, watching what your team does with claims management and helping resolve these issues to me is remarkable, because those are things as an agency, we don't have the knowledge and the resources to be talking to these insurance companies. So can you help explain a little bit more about what claims management is, what it does, and why it's beneficial?
Yeah. And I love claims management. I know it sounds so silly, but I really do. And obviously, I love talking about insurance.
You're like the happiest person I know to talk about insurance, which is the one thing that keeps me up at night.
Yeah, I mean, like I said, I really do love it. I think because it really, first of all, I'm a full puzzle brain person. So like for me to be able to put all the pieces together for people is really helpful. My background was education, so I love talking about it and like being able to educate people. So I also am in my core, I'm a just person. So I'm like, if it's not fair, I'm going to argue that it's not fair, and we're going to figure out how to make it fair for you. So yeah, I think that's why I like it in general. But let's talk about claims management. So claims management. So what we're looking at specifically is all the maternity bills. And we call it maternity claims management because every single bill, any claim that comes through, even if for some reason it didn't get to the insurance company, we will manage that bill. And by managing a bill, what that means is that we get the bill from the actual provider, so hospital, OB, lab, whoever basically would send it to the insurance company, we get that bill. Then we get the evidence of benefit from the insurance company showing that it went through. Then we verify that the dates match up, that the claim amount is correct, that it got processed through according to how the policy is written. So did you pay a copay? Was there co-insurance? Did you hit your deductible yet? Right, like kind of like all the financials of like, did this actually get moved through the system the way that it should have been moved through the system? Then once it has been, then we look at it and say, okay, great. Did the provider charge the right amount? Again, based on the evidence of benefit and what they should have charged. And if it's been paid, did the provider note that it's been paid? Is there a duplication of bill? Have they sent out another bill that actually shouldn't have been sent out because they already got paid on a service date? So all of that kind of goes into, let's say that's one claim, right? Well, we do every single visit, every single claim, every single lab, delivery, anything that goes on during that journey to make sure that at the end of the day, there's no overpayment, that again, the correct insurance company has paid the bills, which I'll talk about what your scenario, because that is the hardest part. And that we have what's called zero balance statements, which means that the providers owed, all providers, again, hospital, OB, maternal and fetal medicine specialist, whomever you've seen,
midwife,
anyone,
ultrasound, radiology,
100%, that everybody has what we call a zero balance statement, which means there's nothing that's owed at all. Everyone has signed off saying, everything's been paid, you owe us nothing. And then from that point, that's when we close escrow. The scenario that you're talking about comes when we have several insurance companies, more than one, and we're dealing with two of them, and one is primary and one is secondary. And I always use like the old Abbott and Costello, like who's on first, that joke of like, I'm on first, you're on first, right? I'm like, that's how I feel like that's the insurance companies on a consistent basis, like who actually is supposed to be primary and who is secondary, right? And what ends up happening is sometimes even, let's say that the GC's insurance is not surrogate friendly, but they're the primary. So that it has to run through her policy first because there is coordination of benefit. Also, side note, because this happens, you cannot choose which insurance company you submit your bills to. People do. It drives me crazy. Like, oh, I'll just submit it to the friendly one. I'm like, you can't.
When you
do
say
that.
people, who are you referring to as people?
Referring, like, I don't know.
The administrative staff behind the scenes dropping the codes or the bill?
This is agencies telling people that they can do this. We've had attorneys say it. We've had intended parents go onto boards. People, I mean, like, on the boards, the surrogacy boards, I'll see it time and time again. You have to, you can use, just give them the ACA insurance for everything. You don't have to let them know about another policy. I'm like, that's not true. You have to, the insurance companies, again, have a primary and a secondary stance. And you have to submit the primary. Even if it's not surrogacy friendly, you have to submit that. And then you can submit the secondary to actually pay for the bills. So I think sometimes, and when I say people, I mean, like, I don't even know. Sometimes it's like the general masses, I feel like. But in that, if they have a primary insurance that's not surrogacy friendly, right? And they submit that over, and then we have the ACA plan that is surrogacy friendly, and they submit that over, and we find, like your scenario said, we find, oh my gosh, the primary insurance that does not cover surrogacy, that has a very clear exclusion, is now covering the bills. It is not okay to sit back and say, okay, that's great. I'm going to let this roll.
Hey, that was a pretty cheap bill. They covered a lot of that portion because I already met my deductible on the primary that's not surrogacy friendly.
Yeah. So it's fine. Everything's great. And we're going to let that roll. So insurance companies have anywhere from 2 to 3 years to come back and audit their bills. And they can deny them and ask for recoupment of anything that they've paid. And then they also, the other insurance that we got, the AC insurance that we actually got for the surrogacy journey, if the claims are not put towards that insurance in a timely manner, then it becomes untimely filing, and they don't actually have to accept the claims, which means they don't have to pay for them because it means it didn't hit them in a timely fashion. And so typically that timely fashion is like a year. It's usually about 12 months. Okay. It can be 18, but it's usually around 12. And so what we find is that it'll go through that primary. People let it ride and thinking, all right, I got this, right? And I don't have to pay as much, blah, blah, blah. And then we hit the point of it getting denied because it shouldn't have paid for it and not being submitted to the appropriate insurance company. And then that appropriate insurance company saying, I'm really sorry, but you didn't give this to us in time. And so now we don't have to pay for this, and now you're left with no insurance coverage. So that's a potential. The other part of that could be easily that because one went to another one, that both will actually stop paying claims until you give them the other one's insurance information so that they can coordinate benefits together. So what claims management does and how that steps in the middle of it really kind of heads all that off is that we notify the insurance company that does the non-surrogacy friendly insurance company, the one with the exclusion. We call them and we say, hey, put a flag on her account. Anything that comes through, make sure it's denied. And then any claim that goes through, we watch it and we make sure that it's being processed again according to the policy, which is that it should be denied. And then we make sure that everything hits that ACA policy on a timely basis so that it can get covered.
So you're watching it from the very beginning.
Very beginning.
Instead of coming in at the end and playing cleanup.
Cleanup's horrible. Cleanup is 3 years. That's our average on cleanup.
Average is 3 years.
3 years to clean up
claims.
a full claims mess from an entire journey to get everybody reimbursed the way they need to get reimbursed, to pay who we need to send it to the insurance company, granted that it's still within the time frame, to have them process it and then have them pay it.
So my escrow could then potentially be open
100%.
for 3 years.
Yes.
That's 3 years of my funds being tied up.
It is 3 years of your funds being tied up. And headache. And late notices and collection notices and everything else that goes along with this while we're working through it. So claims management allows us to be proactive instead of reactive. The worst thing in any, like, this is just insurance related. There are many worse things. But one of the worst things in insurance is to be reactive to a situation, because it's really hard to get what you need, have people, I mean, you're pulling at heartstrings a lot of times on people who are like, please, 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 versus being proactive in it, managing it up front, and asking people to, or not even asking, making sure everybody's doing their job. Because the thought process is, and we've had so many conversations with insurance companies, was, well, you have access to the portal and you have access to your EOBs. So you should have known that this was happening and you should have fixed this. And the reality is most people in the United States are not equipped to do this. They don't have the knowledge. They don't understand what their rights are. And so we find that the insurance companies take it. I don't want to say this across the board, but we find a lot of times that they're taking advantage of that situation, that a lay person would not know this, truly.
Okay.
So that's what it does.
And so when is the right time to initiate claims management? Not at the end of the journey.
Not at the end of the
Not
journey.
at the end of the journey. Lesson learned.
Yeah, lesson learned. Not then.
But that is a possibility. I mean, that can be done.
It can be done. And of course we'll
Yes.
do it, and we do it on a regular basis. I just would like to see us not doing it on a regular basis.
Because then, like you said, it prolongs escrow.
It
being open, amongst other things.
Among other things,
3
yeah,
years.
yeah. I mean, honestly, it's the frustration on everyone's end. The gestational carrier is birthed and given, right, and has the baby's in the intended parent's arms, and that's wonderful. And yet she's still 2 years later dealing with medical bills. That doesn't feel good. I wouldn't want to do. No. I wouldn't want that on myself or to put that on anyone else, right? So, the ideal time frame is to start it at the point. Really transfer. I'm wrong. So transfer is when you should start getting all the paperwork together. I say that signing up for the service, we would want someone to sign up for it around confirmation of pregnancy.
And is confirmation of pregnancy HCG or
heartbeat?
Heartbeat. Okay.
Yeah. So we want to do heartbeat, and I don't want them signing up for it usually ahead of that time, because we want to make sure that the pregnancy is viable and right. And then at that point, that's where we'll get all the HIPAA releases. We'll get all the login and passwords for everything. I know there's a concern sometimes about giving us logins and passwords. We can work through it as long as we have a HIPAA release so that we can get the information from the insurance company. But if we don't have HIPAA releases, then we can't. We won't. So that's one of the things that, from a gestational carrier standpoint, there's a lot of talk, which there should be, about protection of the family's information, because a lot of times these are family plans, and I get that. So they don't want to hand over login and passwords.
I understand.
And I understand that.
Yes.
And so I tell everyone that's fine. You can sign a HIPAA release that only allows us access to yours. I don't need your login. I do need to call an insurance company and ask them to send me a list of your EOBs specific to you. So like we can sign HIPAA releases that just, again, give us access to very specific items. But we do have to have it in order to be able to manage it. And again, it's for the protection, honestly, of the gestational carrier. That's what we're finding more and more, is that, I mean, yes, the intended parents get their money back faster, 100%. They're not paying duplication of bills. I think financially it protects the intended parent. On the gestational carrier side, there's not collection notices, right? When the collection notices happen, we can get them pulled out because they're not the responsible party. So we can always send a letter to the collection company and say, hey, she's actually not the responsible party, so can we please get them out of her name?
Cease and desist.
Basically.
Yes.
Basically, yeah. But again, that's usually far down the road, right? So it's just, again, proactive versus reactive.
I love it.
As much as possible.
Okay. All right. So we've talked about so many different types of insurances. Yeah. I promise I was not going to keep you for 4 hours today like I did last time.
I know, but I said it was fine if you did, because I had a great time.
But tell me, what else do you think we need to talk about as far as educating people about insurance or protection, risk management?
I think the biggest thing is be open to these conversations. I think sometimes, and I realize it's kind of the nature of the beast, that when we're talking about these items with intended parents, there can be a feeling of, you're selling to me, right? You're trying to be salesy, and or you make the money off it, so you're trying to get us into this, and that's just not That's just not the heart of who we are. And so I think being open to having those conversations. I also think rely on your agency if you have one, rely on your attorneys. As much as I think the boards are a great place to maybe get a little bit of information, please don't rely on them, right? Because there is some misinformation that's given out there. A lot of us professionals are on those boards, and we're trying to mitigate that as much as possible. We can't mitigate everything. So I think that's the big thing, and don't be afraid to ask questions, and don't be afraid to say, hey, can we sit down and have another chat about this?
Absolutely.
I think as many questions as you can ask them. We'll always tell you. The biggest question we get every single consult that I do is there anything else I should know? And we're going to tell you everything else that we think, hey, that you didn't bring up or that you should know.
Do you know there is one thing that we didn't bring up?
Oh my gosh, what?
Rest easy.
Oh, we didn't.
Do you want to give a quick
Synopsis
overview of what it is?
Yeah.
Super quick.
So it is short-term disability insurance. Is that good? I'm just kidding.
But it does not cover.
It doesn't cover past pregnancy or past delivery. So it's only going to cover pre-delivery. It's honestly a great insurance. It's based on lost wages for the gestational carrier. If she is working, if she is not working, it will cover housekeeping as well as childcare. So if for any reason she has to hire in because, again, she's on bed rest or anything like that, then it would cover that. And I think it's important to check that out. If she has disability, I always tell everyone, if they have disability through their work, that is a better coverage than what we can offer. However, not everybody has that. So
when is the best time to put it in place?
Prior to the 12th week of gestation.
So definitely start that application process.
I say at the time, honestly, confirmation of pregnancy.
Okay.
That's a great time to start it, because you can hold off for a couple weeks if you want to and have the quote ready to go, and then again
and
pulling
then put it in place.
Yeah, and then put it in place. Usually at the release to OB is a good time to put it, like to sign, seal, deliver it.
Okay.
But let's get underwriting done.
And you can set, the different time frames that you want and the amount you want it to pay up to.
Absolutely. Yeah. Yeah. So it's
a great option if they don't have it through their employer or already another plan.
And you never want to buy more because everything's going to go back to pay stubs and contractual obligations. So you want to know how much housekeeping would be. You want to know how much childcare would be per your contract, right? They want to know what her actual take home or, gross pay is, because it's going to be based off of that. So it's important to know all those numbers and to not purchase more. Sometimes people will purchase more thinking, oh, she'll get more. They don't. They're going to go based off of factual information. So don't inflate it.
Okay. All right. So,
yeah.
To conclude.
Yeah.
You ready?
I'm ready.
No more insurance talk.
Oh, okay.
All right.
Okay.
You ready?
Yeah.
This is rapid fire questions.
Oh,
and instead of 10, it's 7 because 7's my favorite number.
Oh, yay. Okay. But not insurance related?
No, none of them are insurance related.
Okay. I like it. I'm ready.
All right. Are you ready?
Yeah.
Current book that you're reading.
Oh my gosh.
You sent me a picture of it if you want to talk about that one.
What did I send you?
The Journey. And I don't know
the mapping.
The
mapping. Okay, that's work, but that's insurance related. Okay, not insurance related.
Not insurance.
Okay, guys. I am currently reading Zodiac Academy. It's a super fluffy book because I need things to read at night that are not related to work.
Zodiac Academy.
Yeah.
Okay. Favorite song to karaoke?
Oh my gosh. I like Big Butts. It is. It's my favorite one. I know the whole entire song.
All right.
Yeah.
Favorite animal?
Oh, penguins.
Penguins. All right. Go Pittsburgh Penguins. Not the same. All right. Favorite travel destination?
Oh, okay. Domestically, Charleston. I really love Charleston. Yeah. I would say internationally. I loved Taipei. Okay. Yeah.
Favorite adult beverage?
Ooh, okay. Ugh, I like adult beverages, so this is going to be very difficult, but that's fine. Okay, I like a really good red wine. I do. Like I don't even know because I like them so much. I don't like Sangioveses though. I know. Do you like San
That's
Diego
one of my favorites.
I know.
Yes.
I'm like, I feel like it's like a hit or miss one. Like some people love it and some people don't. It's like
favorite.
I don't like it. But I like a really good cab. I also like a good Borello. Ooh, I really like one of those. And then like I love margarita. I love margaritas. And then I like Palomas.
Okay.
But I don't put salt. No salt. No salt on the rims.
No salt. Sugar?
No.
Nothing. Okay.
No.
Favorite restaurant?
Oh my God, why are you doing this to me? That is not fair. That's such a good one, though. Okay, so abroad?
Anywhere.
Okay,
you can do both. Okay,
I'm gonna do both. Abroad is a restaurant in Brussels called Hispania.
Okay.
And it's phenomenal. So if anyone ever goes there, go there. Go to Hispania. And then domestically, my favorite restaurant. You know what? I do have my favorite restaurant, and it closed down, and I was very sad. And it's in Charleston, and it's called Justine's Kitchen.
Breakfast? Diner?
Low country soul food. Those are my two.
Those are two. But it's closed.
But it closed down during COVID, and I was so sad because I had a friend who was going to Charleston. I was like, and I tell everyone in the goes there, I'm like, you have to go to Justine's Kitchen. And I was like, you have to go. And then I was looking it up, and I was like, oh my gosh, it closed. So that was really upsetting. But I think like that's still open. That I'm like always makes me feel like, yay, is probably from my hometown, and it's called La Cocina.
Where is your hometown?
Santa Clarita, California.
All right. That wasn't one of the questions.
I know, a little outside of Los Angeles.
All right. This is actually a combo question.
Okay.
How many pets do you have, and what are their favorite treats?
Oh my God. Okay, so I have 3.
3.
I have 2 cats and a dog. The cats' names are Baxter and Tubby. Here's the story real quick. Her original name was Tori, and then I took her to the vet when she was like 4 months old, and she was a little roly-poly, and the vet said, oh, she's just going to be a little Tubby girl. And I was like, that's it. That's her name. So her name is Tubby.
From Tori to Tubby.
Tori to Tubby. It's officially changed. All her medical records and vet records specifically say Tubby. Like, it's not even a nickname. It's legit. And then I have Phoebe, who is a 3-year-old golden retriever. And I just got her in September, which is less than a year ago.
And she's a rescue.
She's a rescue.
She sometimes makes an appearance on calls.
She does make an appearance on calls. She's very, like, she wants to be right next to you. She loves to cuddle. She's very, very active. She's very spazzy, which makes me laugh because, yeah, I love spazzes. So I'm a spaz myself. So I'm like, I love this. Okay, favorite traits. So Tubby likes, guys, listen to this. Tubby likes coffee.
My dog loves coffee.
Yeah.
At any opportunity, will try to drink my coffee.
Yes.
Do you ever wonder if they were a human in a former life?
She was.
Like, owned a coffee shop.
She also loves spearmint. So, like, after you brush your teeth, she's like, let me get up in there. And I'm like, girl, I need you to back up. I don't need you near my mouth at this point in time. It's so weird. She loves, like her 2 favorite things.
Do you brush your teeth?
No, but I should. I'm sure she wouldn't like it, though.
Oh, okay.
Because it's like, I wonder if it, we're going to try that. See what happens. That'd be funny. Baxter's is probably Tuna. He's like your traditional cat. He's kind of boring. He's cute, but yeah, he's traditional. And then Phoebe, her favorite anything. She doesn't have a favorite. She just I call her a grounds cleaner. Like anything that's on there, she's like yes. So I don't think she has a favorite.
She just loves everything.
She loves everything.
Okay.
Like she was eating carrots the other day. I was like,
My dog loves carrots too.
Yeah. So I was like, okay, that's what you got.
Awesome. Well, Sarah, thank you so much for joining us today and educating us all about insurance. And
Thank you.
I'm so happy that you were here for us.
And Kristen, this is your first one.
It is. And I'm so thankful that you were here for the first one
was like,
because
this is the inaugural.
you make everyone feel so at ease when they're talking about difficult things such as insurance. So you made me feel so comfortable and I'm
you.
so happy.
I'm so happy. I'm so honored.
Thank you so much for being here.